What's going on, everybody? Big day. It's the bond. What is it? The bond crisis. The credit crisis. I said I was going to start off all of my videos now with the bond crisis. The 10-year yield settled at 4.43, 7 basis points below the upper range of the Fed's target range. So the bond crisis, I'm gonna report that every day. Folks, before I get started, I have a little surprise. Maybe some of you are not gonna like it, I don't know, but I told you last week that I got a new gun in my collection. I know some of you are turned off by guns. For me, it's a hobby, it's a recreation. I enjoy going to the range and shooting, and the guys that I meet there, the people I meet, the camaraderie, I just enjoy it. So here it is. I want to present it to you because I got it today. Actually, I got it at auction. And guess what it is? This is an AK-47, folks. It has, check this out, it has a retractable metal stock. I mean, isn't this badass, this thing, man? There it is, folks. I'm taking it to the range on Thursday, and I'm psyched to try it out. So this is going in my collection. They're not easy to find. It's funny because the ammo, I bought ammo for it. 7.62 by 39 cartridges, made in Russia. So it's pretty original, man. At least the ammo is. I don't think this thing is made in Russia, but I'm not sure where it is. It's Eastern Bloc somewhere. But yeah, man. So I got this. All right, let's talk about the markets. Let me set this down. I got it in my lap. Ugh. All right, let's talk about the mercados. So today, I gotta be honest, I was kind of surprised by not so much the rally. I know Trump came out. I talked about this yesterday. He came out yesterday. It was yesterday or Sunday night, actually. I think he came out, and this is a thing he's doing. This is like a game he's playing. I think that if we end the week on a down note in the market, he'll come out on a Sunday with some bullish comment. He'll put it on Truth Social or wherever, and that'll trap the shorts, and the next business day when the market opens, it shoots up. So I was totally, when I heard that he said, there was going to be a postponement of the 50% tariffs on Europe, I knew the game. We're going to get the headline traders running in there. They're going to buy the market. It was up overnight like 400. I thought that's about it, but we ended up like 700. And we're up now in the futures a little bit, not much. Let me just say this. I am a skeptic of this rally right now. And the reason why I'm a skeptic is I've kind of been explaining it to you that I am seeing now in the data, the tariffs are really starting to kick in. And I believe that the negative impact from that, at least in terms of net government transfers, I've been mentioning that, and I've been covering that for you guys. As the tariff taxes, as those customs taxes increase, those net government transfers, they're going to shrink. That's the water in the swimming pool. That is the stock of financial assets in the economy. All right? And so, if the stock of financial assets, if the quantity of financial assets in the economy, that's like financial assets are the fuel, okay? That's money. We're basically talking about money. That's the fuel for the economy, for growth, for markets, etc. If that's slowing down, if those transfers are slowing down, that's not a good thing for the economy. Now, everybody turned bullish. I told you about this. You know, back when we were making lows in early April, and I said the worst of back then, I said almost at the exact day, I said the worst of the tax drain was over and we're going to get a rebound. Okay? And then I said we're going to come into the quarterly interest payment, which was May 15th. All right? And I said that was going to lead to a market correction because we're still under the debt ceiling and we still have this condition, you know, that's the bilge pump, the boat getting swamped with reserves, sinking the boat. And we had that correction last week. By the way, NASDAQ pretty much erased that correction, last week's correction with today's move. The S&P and the Dow did not. I mean, they erased a good chunk, but they didn't erase the whole move. And the NASDAQ didn't completely erase it, but pretty much almost all of it. It didn't go on to a higher level, but pretty much all of last week's decline it erased. I am a skeptic on this because this is not going to go away. And I find it kind of curious, funny actually, that you know, everybody's jumping in here because it was a postponement. It wasn't like, okay, they're not doing the tariffs, or even they're doing the tariffs, but they agreed on certain minimal amounts that everybody's going to respect. No, all it is saying, okay, I'm not going to put them on until July 9th. And July 9th is when those other tariffs come off as well. I think that's the tariffs on China or something like that. There's a bunch of them that come off. So everybody's getting all bullish and excited about a postponement. Nobody other than myself is telling you about the fiscal drag that is happening right now. I mean, I quantified it for you. Nobody's doing that. I told you right now we're running at about 25 billion a month in fiscal drag. That alone. Forget about what comes, what comes around on July 9th. That alone, you're talking about 300 billion a year reduction in transfers. When that July 9th happens, see, I said this yesterday. I think I said this yesterday anyway, but I'll say it right now. This is the same thing as when the Fed started to raise interest rates in 2022. And I said in the beginning, you know, you're going to get your typical reaction from the zombie monetarists. They're going to sell the market. They're going to freak out. They're going to say, oh my God, interest rates, it's a recession coming and the market's going to crash and this and that. I said, be very careful because when the Fed raises interest, it's going to increase. It's like a fiscal operation. It's going to increase interest income transfers into the economy. It's going to start slowly at first, but as they raise rates, it's going to increase and increase and increase. And now everybody's going around saying, oh my God, interest payments for the government are over $1 trillion. It's more than a defense budget. I told you that was going to happen, number one. And I told you it was going to be bullish for the economy, not bearish. And that's exactly what happened. And now I'm telling you, we got the same thing only in reverse with these tariffs. That everyone now is thinking, oh, it's not such a big deal anymore. And, you know, he postponed it and maybe they're going to come to something. Folks, these things are going to continue to increase in terms of the fiscal drag, the braking effect that it's going to have on the economy. It's going to be the same thing like the interest income transfers, only in reverse. The braking effect starts lightly in the beginning, then it gets harder and harder and harder. So just remember that I'm telling you this. And everybody now is all bullish. If you look at the I said this, you look at the weekly sentiment survey from the American Association of Individual Investors, that flipped bullish for the first time since January. okay? They were not bullish down at the bottom in early April. They're bullish now, okay? The put-call ratio is still very low. That usually indicates like more or less bullish sentiment, more call volume going on. So like, be careful. And everybody's saying we're going to have a good year. The tariffs are going to be fine. I'm watching all these pundits and these Wall Street people. Nobody's mentioning the stuff that I'm telling you right here, right now. All right? So be very careful. As far as the bond market is concerned, look, there's still the big unknown. And that big unknown is the budget. And the other big unknown, which is really the thing that controls everything, at least when it comes to interest rates, that's the Fed. If the Fed doesn't do anything, rates stay right where they are for the extended period, for good, if they just leave the rate here. If they cut rates, you're going to get a big bond market rally. And the only way I see them cutting rates right now, because like I've been talking about this, I think Powell has a vendetta out against Trump. I said yesterday, it's either that or it's the fact that he's covering for some big hedge funds that are short the Treasury market, and like he's kind of backing them or helping them out because he's looking for a big position, high paying money after he gets out when his term is over. Or maybe it's a combination of both of those things. Because the Fed is not, whatever they're telling us now that they're data dependent, they're not data dependent because the trend in inflation is definitely in their favor. They could easily cut rates, or even if they don't cut rates, they could stop with the hawkish rhetoric. All right? They could communicate in a more neutral fashion, but they're not. They're on purpose. Powell is very hawkish. So that's going to determine where the bond market goes. And, with these tariffs, if we see inflation, Trump's telling companies you got to eat the cost. So that's corporate profits. That goes down. And if they want to keep their corporate profits, they got to cut costs. And the way they're going to cut costs is by laying people off. And I don't see that as a positive environment for the economy and ultimately for the stock market. So I'm cautious here, folks. I think this rally today was way overdone. We have a Social Security payment tomorrow. That's a reserve dump, another reserve dump. And we have the biggie, the first of the month payments, at least some of them going out on Friday, which is May 30th, okay? Because June 1st falls on a Sunday. So we're getting, maybe all of those payments go out on Friday. I'm not sure. Maybe a big chunk of those go out on Friday and then some on Monday. Again, this week, big reserve dump. The last time we had that reserve dump with the quarterly interest payment, we had the market correction all last week as a result of that. I keep saying it takes time for the financial system to absorb these giant reserve dumps because you don't have effective reserve management now that the Treasury is operating under the debt ceiling. I'm teaching you things here that nobody else, in fact, you're getting taught, if you want to call it that, the wrong stuff. The opposite, which is wrong. Okay? So that's it for today. I just want to leave you with something just hit my mind because it has nothing to do with the markets. I'm just asking a question here. If you get something new or something like that, and you're excited and you want to show a friend or a relative, do you have these people in your life that, you're excited, you want to show them something, not necessarily to show off or anything, but maybe it's like, I'm a collector or whatever. It's something you're really excited about. And the first thing the people ask is, How much did you pay for it? I mean, what is with that? You're excited, you want to show something, maybe it's something you're really into, a piece of art, something like that, a car that you bought, I don't know, a pair of shoes, a dress, a suit. The first thing I just find that so annoying. Like the first thing, those are shallow freaking people. Like the first thing not, hey, Mike, I'm happy for you. Or, hey, Joe, I'm happy for you. That's great. That looks really cool. It looks great on you, whatever. Use it in good health. Enjoy. No, how much did you pay for it? What is that with some people, man? Anyway, I don't know. All right, I'm done for today, folks. Please like and subscribe. Working towards that 10,000 subscribers. That'll be cool. And don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trade. I'm the only one telling you this stuff. All right? The news came out just, I think, yesterday, talking about the jump in the tariff deposits, the customs deposits to the Treasury. I told you this stuff on Friday. Actually, for the news, that was a pretty quick turnaround, I have to say. Anyway, that's it for me today, folks. I'll see you tomorrow. Bye.